Let's welcome Kevin Lings from Stanlib to the forum.
Hi,
Morning,
Jeremy.
Kev. The first guest.
Thank you.
The guinea pig. And on that account, I will hand over, if I can find it, the commemorative coin.
Right.
The first in a series of commemorative coins.
Okay.
This is a 5-cent South African coin.
Thank you very much.
And that's yours to have and to hold on to.
Brand new as well.
It's brand new, and you know what? That may be a very good investment. You may be able to sell that for, I don't know, 7 cents in 12 years' time.
Okay.
Let's try and sort this whole problem out by looking at what's wrong with the world.
Okay.
Where did the world cock it up?
Okay. Look, let's be fair. The entire world didn't mess it up. It was pretty much focused on the United States, so we can blame the US for this. This is quite cool, legitimately. It just so happens that the US is by far the world's biggest economy. It's 24% of the world. So when they mess up, the whole world gets affected. Basically what they did was they extended a huge amount of debt, a phenomenal amount of debt from the banking system to individuals. Individuals were living progressively beyond their means, which means you're taking on more debt all the time than what you're earning. And it's always fun when you're doing that, right? But at some point it's a problem. You max out.
So in other words, you have a 100% mortgage on your house.
Well,
you max out on your credit card as well.
Yeah. So
and you're overdrawn on your bank account.
The whole lot. So they were actually giving mortgages of well over 100%. And people were able, obviously, to access all other forms of credit. So progressively, the consumers living beyond their means. They're running up debt faster than their income is growing. And what it does for you as an economy, it allows you to boom, right? Because all these consumers are taking credit, spending, and the economy flourishes. Now, one particular aspect that grew phenomenally was housing. So huge amount of consumers getting into the housing market, buying houses. So home ownership goes up and up. It goes to over 70%, high by world standards. Over 70% of households in the US own their own home. But it wasn't just owning your own home, it was owning a second home, owning a third home. So they looked at this and they said, this is an unstoppable asset class. How can we make more money? And they extended mortgages to people who could honestly not afford it. That was called subprime.
But isn't that just stupid? I mean, as a bank manager, if I was a bank manager and somebody came in and I looked at what he earned, I would say, sorry, bud, you can't afford that house.
Okay, but it doesn't work. You see, we relating it to South Africa, because in South Africa, you would go to a bank and the bank would assess you financially and decide to give you the mortgage or not. Not quite the same in the US. What would happen is, in the US, you get a mortgage originator, a guy whose job it is to go and get the mortgage. He's not interested or cares about whether you can afford it. He just wants to do the business because he earns commission if he gets you to get a mortgage. So he finds you, then he takes that to the bank. The bank looks at it. They equally don't really care, because what they know is they're going to take that mortgage once they've given it to you, and they're going to sell that mortgage into the market to somebody else. They're going to pass on that risk.
Okay.
And that risk ultimately went on to Lehman Brothers. Let's use that as an example because people know that. Right. So the mortgage originator comes and speaks to you. He knows you can't afford this. He doesn't care. He wants the commission. He does a deal with you, he does a deal with the bank doesn't care, they pass it on to Lehman Brothers. Lehman Brothers owns all of this. Eventually it's a house of cards. The consumer can't afford the mortgage and they start to default. But now, and that happens everywhere all the time, right? Consumers default all the time. We're just talking a lot of consumers defaulting on housing.
Okay.
So the housing market starts to collapse. House prices in the US fall 30%, top to bottom, 30%. There are now 14 million vacant houses in the US. Can't sell them. So who ultimately picks up that tab? The banking sector is now at massive risk. So much so that the banking system runs the real risk of going bankrupt. Okay. So if you're the government of the United States, can you allow your banking system to go bankrupt? The answer, no. Your entire economy collapses. So what you do out of absolute necessity, you bail out the banks.
You're taking the government, the US government now is taking the responsibility over and bailing out the banks.
Yeah.
But they have to be using taxpayers' money to do that. Now, if the Oaks aren't able to pay their mortgage, how are they paying their taxes? And isn't there a risk of a tax default, if you know what I mean? Yeah. So, how do you balance it, and how far can it go before, once again, the scales are tipped?
Okay, yeah, that's exactly right. What you're doing is you're transferring the debt from the private sector, from the banks, ultimately transferring that debt to the government. And you're doing it in two forms. The one is the government itself is taking on that debt by bailing out institutions. Let's say the motor industry, it bailed out the motor industry. Yeah. And the way it's doing that is it's just borrowing more. It's incurring debt. It's issuing government bonds, instruments into the market, and saying to the market, saying to the world economy, please finance us.
Okay. One step back.
Yeah.
What is a government bond?
Okay, think of it as an IOU. The government has a piece of paper, let's call it a bond, a treasury bill, and think of it as an IOU. I'm a government, I draw up this piece of paper, I owe you, I promise to pay the bearer of this piece of paper. I give that piece of paper to you. That piece of paper has a value. I give that piece of paper to you, you give me money in return. So now I'm borrowing money from you, you hold this piece of paper called a government bond.
Right, okay.
You can hold that, they have different durations, 2 years, 5 years, 10 years, in the US 30 years. I can give you that piece of paper that matures in 30 years time. You hold that piece of paper and in 30 years time you come back to me, give me my piece of paper, I give you your money back. Plus I give you interest every year, government bond.
Okay.
Of course, the advantage for you is once you've got this piece of paper, let's say that you're the Bank of China, you've got this piece of paper, you can trade that in the market, you can sell it to somebody else. And that becomes a massive market to buy and sell government bonds.
If the guys aren't paying for their houses and they're not paying the banks and the banks are nearly going belly up and the government is bailing out the banks and the government is selling these bonds on,
yeah.
Who are they selling them to?
Okay, the people who are buying the government bonds, the US, we're talking the US,
yeah.
is literally the world. I'm not exaggerating that. China buys a huge amount of government bonds, so do many other governments. Now here's the strange thing about the US, and I can't explain this properly. It's one of those touchy-feely things, right? And what it says is this. When you look at the US economy, they've got major problems. They're massively indebted, the economy is struggling, they've got high unemployment, their consumers overstretched, their housing market has collapsed. Yet, the world is more than willing to buy their government debt. And
why?
More than it's got to do with this.
Why would you be that stupid?
Okay, let me put it this way. If you take a group of people, any group of people anywhere in the world, and you put on the table a whole lot of currency packs, each currency is of the same value based on the current exchange rate. So let's say I put 20 currencies, 20 different currencies on the table, and I say to a person, choose one, it's yours, for free, take it. You can choose any currency you want. Right now, rightly or wrongly, the majority of people in the world will pick the dollar. Why? I don't know.
But it's weakening by the day.
We know this, you know why? Because if you look at the world savings, if you total up every country's savings, and you say what currencies that savings held in, more than 70% of the world's savings is currently in dollars. So here's the strange thing. The US economy appears kind of fragile, partly broken, lots of problems, but the world still trusts the dollar above every other currency. And while that exists, the US government is able to issue these bonds and the world says, okay, I'll have some of that. So let me ask you this, what is the safest investment in the world? What is regarded as the safest investment in the world? US government bonds.
Okay, now wait, hang on. You're saying that 70% of the savings in the world are in US dollars.
That's right.
So in other words, 70% of the people in the world who are saving money have actually lost, what? 20, 30% of their value because they're saving in US dollars.
Sure. Yet they continue to hold the US dollar.
Are we all stupid? No, honestly.
It's got to do with, it's a psychology thing. Why do you choose the dollar over all the other currencies? There's a lot of history with the dollar. There's a lot of success with the dollar. There's a lot of success with the US economy. It certainly has achieved that. In other words, it earned its status. You would say in the last couple of years, it's losing that status on various grounds, right? So it takes time for people to adjust to that change in status. But right now, the world has not fully adjusted. We sense that people at the margin are starting to look for alternatives. The problem is there's no obvious alternative. If you don't want to hold the dollar, which currency are you going to hold?
Swiss franc?
Well, that would be one, but it's not quite at that level, that status in terms of its size, its liquidity, how many bonds they issue, etc. So it's the part of the problem with everybody liking the dollar is there's no obvious and natural alternative.
So we are just stupid. That's really it. Yeah, kind of.